Hi everyone and welcome to BIGLZ Investing, and in this video I'm going to be telling you about 3 stocks that I believe will change our life forever. But before we get into that, I want to start by saying that this video is for entertainment purposes only. Please make sure to not take any of this video as financial advice, and please make sure to do your own due diligence prior to making any investment. Now that that's been said, let's get into the video. Okay guys, so today we're going to be discussing 3 stocks that I think will change our life forever. So in this video we're going to be discussing the company's background, basic company statistics, the size of the industry that the company is in, and why the stock is so special. So the first stock on my list is Block, ticker symbol SQ, who also have the earnings date coming up on the 4th of August. Block was formerly called Square and is a financial services and digital payments company based in San Francisco, California. Now, the reason that Block changed their name from Square to Block was because they wanted the company to reflect the direction that the company was going into, which was crypto and blockchain, as well as financial services. Block was founded in 2009 by Jack Dorsey and Jim McKelvey. Jack Dorsey is the company's current CEO and Jim is the company's director. The company employs over 8,500 people as of 2021. So as you can see, Block share price at the time of recording this video, again, all of this is at the time of recording this video, the Block share price is $65.98. It has a market cap of 38.3 billion and earnings per share of minus 17 cents. It has a strong buy rating. It's been rated by 35 Wall Street analysts. 28 give it a buy rating, 6 give it a hold rating, and 1 give it a sell rating, which makes it a strong buy. It has a 12-month price target of $134.16, which represents a 103.3% upside potential, which is a massive return if you ask me. And again, that's because the stock's been beaten down so much. So as you can see, a Block is currently down 76.59% from its all-time highs, which was $281. This gives the company a 4x return just to get back to previous all-time highs. Now just let that sink in. A 4x return just for it to get back to its previous all-time highs. And that's not for what it's going to do beyond that price. That is a massive, massive, massive opportunity if you ask me. So let's have a look at the market size of the industry that Block is in. So the digital payments market. The global digital payment market size is expected to reach 361.3 billion by 2030, expanding at a compound annual growth rate of 20.5% over the forecast period. According to a new report by Grandview Research Inc., the market growth can be attributed to the growing volumes of cashless transactions worldwide. According to PwC, a consulting company, the global volume of cashless payments is expected to increase by more than 80% between the years of 2020 and 2025, to nearly 1.9 trillion by 2025 from nearly 1 trillion transactions in 2020. The rising demand for digital payments has encouraged several smartwatch providers to introduce enhanced smartwatch capability of making contactless payments. So as you know, all the new products that these companies are making, they're making it so that they have the ability to be able to pay with the device, because they know that that's the way forward. So if we look at the fintech market, the market size stood at 112.5 billion in the year of 2021. The global fintech market size is expected to reach 332.5 billion by the year of 2028 and is expected to grow, exhibiting a compound annual growth rate of 19.8%. Now you imagine, Block, they're not just in one industry, they're in multiple industries. So if they have the digital payments industry growing at a compound annual growth rate of 20.5%, and they have the fintech industry growing at a 19.8% compound annual growth rate, they are in 2 massively huge industries that are going to be growing so fast and so robust over the next few years. It's absolutely insane to be a part of a company like this. This is why I think it's an absolute great investment. So why I love Block. The company is in the crypto industry. In my opinion, the crypto industry is going to be a massive industry that's going to revolutionize the world as we know it going forward. It's going to be the greatest revolution that we've seen. Well, at least in my lifetime, I believe that this is going to be the greatest revolution that we have ever seen in terms of the financial space. There hasn't been as much financial innovation as the crypto industry. So the fact that Block's getting into that, Block recognises that, and that's what I think is going to be a massive reason why Block crushes gains, gives us amazing returns over the next few years. Block diversifies. They don't only do consumer, but they also do business-facing services, which is very good. It offers better growth than PayPal. Yeah, you could argue that PayPal is a safer stock than Block, but Block, in my opinion, offers way better growth. And sometimes, if you want to grow your capital, it's better to just be a bit more on the bold side and just go for it. You know, Block is a great company, so if I believe that Block's going to get higher returns than PayPal, then why wouldn't I just go with Block? Yeah, PayPal's more safe, but because I'm young, I'm in a position where I want to grow my capital more, rather than preserve it and this and that. I'm in a high growth phase, and not many people will agree with what I'm saying, and not many people will have the same mindset. But for me, I'm in the process of building up my capital as fast as possible. So then, later on, when I have more money, I can diversify it into safer stocks. And don't get me wrong, maybe in the future I will put some money into PayPal. But right now, I feel that Block is a better investment for my risk tolerance. So it has 4.79 billion in cash as of the most recent quarter. Now this again goes back to the point I was just making. 4.79 billion in cash is a lot of money. So it's not something that I don't see as being safe. This is a reason why I've picked Block over a company like PayPal, because yes, PayPal may be seen as more safer, but Block has 4.79 billion in cash. That can last them a long time if something bad was to happen with their business model, or again, we was continuing to go through the pandemic, etc., etc. And this is a very, very good thing for me to know as an investor. Cash App. So Cash App is currently the largest transaction platform for online and digital payments. I believe it's only running at the moment in the UK and the United States. They have what's called Afterpay, which is a buy now, pay later platform which originated in Australia, and they recently made the acquisition of this in, I believe, the start of this year of 2022. The next stock, Amazon. Ticker symbol AMZM. They have an earnings date on the 28th of July. So Amazon is a multinational technology company which focuses on e-commerce, cloud computing, digital streaming and artificial intelligence. Amazon was founded in 1994 by Jeff Bezos and is based in Seattle, California. Jeff Bezos is the executive chairman and Andy Jassy is the president and CEO, which I believe took over from Jeff Bezos in September of 2021, but I'm not quite sure on that, but I believe it was September of 2021. Amazon currently employs 1.6 million people worldwide. I think that has to be the company with the most employees on the entire planet. It's absolutely insane. So if we look, Amazon currently has a price of $130.55. And remember, this is after Amazon did their stock split. It has a market cap of 1.15 trillion, which again is absolutely monstrous. And an earnings per share of $2.13. The earnings per share was a lot higher before the stock started to crash down. It's been given a strong buy. It's got 39 ratings, with 38 being buy and 1 being a hold, and it has 0 sell. This gives it a price target of $176.38 and a 55.3% upside potential. So if we look here, Amazon is down 38.62% from all-time highs. This means that the stock needs to go up by 47% just to get back to the company's all-time highs. And this is what people don't realize. It only seems like 47%, but when you put 47% on a company like Amazon, which offers the amount of safety that a lot of investors require, a lot of people are very safe investors, this is the perfect investment. It still gives what I call high growth, but it also gives that level of safety. In my opinion, Amazon is probably the safest company on the planet right now. So to get a 47% return on that is absolutely insane. So if we look at the market size for this, so the global retail e-commerce sales, in 2021, retail e-commerce sales amounted to approximately $4.9 trillion worldwide. This figure is forecast to grow by 50% over the next 4 years, reaching $7.4 trillion by the year of 2025. The cloud computing market. According to the Precedence research, the global cloud computing market is projected to hit around 1.6 trillion by 2030, and with the strong growth at a compound annual growth rate of 17.43% from the years of 2022 to 2030. $1.6 trillion, guys. Wow. And the artificial intelligence market, the global artificial intelligence market was valued at 328.3 billion in 2021. The market is projected to grow to 387.4 billion in 2022 and 1.3 trillion by the year of 2029, exhibiting a compound annual growth rate of 20.1% during this period. Do I need to say any more? So why I love Amazon? Amazon Web Services. Amazon Web Services is Amazon's cloud computing platform, and in 2021 it did 62 billion in top line revenue, and it is the largest in the industry. And I believe that potentially this will be even bigger than their e-commerce platform, and that is a bold claim, but I really do believe so. And also a business like Amazon Web Services offers a way better margin than the e-commerce side of it, because they have all the vehicles and the robots and the employees, etc., etc. Amazon Web Services is much better for margin. They own many brands. This is another reason. They own many brands. Most notably, they own Twitch TV, they own Whole Foods, and they have a large stake in Rivian, which is a new electric vehicle company that are set to do big things in the future. They have 96 billion in cash or cash equivalents on their balance sheet. So you can pretty much imagine that if this company didn't take a sale for the next couple of years, they would survive with this amount of money. It's absolutely insane. They recently did a stock split. Now, when the market as a whole goes back into a bull market, Amazon will massively benefit from this, because the whole point of a stock split is because they want to make the price more attractive to retail investors, which are the smaller investors, which will look at the recent Amazon price and go, $2,000, $3,000, I can't afford that. So when the bull market resumes and we're not in treacherous times, this price and the volume that influxes into Amazon stock is going to be massive in the coming years. Next company, Tesla. Ticker symbol TSLA. They have an earnings date coming up on the 20th of July, which I believe is on Wednesday. Okay, so Tesla is an American multinational electric vehicle and clean energy company based in Austin, Texas. Tesla was founded in 2003 by Elon Musk, Martin Eberhard, J.B. Straubel, Mark Tarpenning, and Ian Wright. I don't know if I pronounced all the names right, but correct me if I didn't. Elon Musk is the current CEO of Tesla and has been since 2008. Tesla employs over 99,000 people. Tesla has a current share price of $720.20 with a market cap of $740.4 billion and an earnings per share of 7.42. Again, this number was a lot larger prior to the price going down a lot. The consensus for this one by the analysts is a moderate buy with 31 ratings, 17 being buys, 8 being holds, and 6 being sells. I don't know how this many people can have the sell rating on Tesla. I think it's absolutely insane. I don't know what they were thinking. It has a 12-month price target of $854.86, which represents an upside potential of 18.7%. I think the analysts on this one are being a little bit pessimistic. I believe that it can do higher numbers than that, but we'll see. So Tesla, the Tesla stock is down over 41.4%. And it needs to do a 52% gain to get back to previous all-time highs. And again, we're talking about a company that is almost $1 trillion company, needing to add 52% to its stock price to get back to the previous all-time highs. That's not enough. That's not including the amount of growth that it's going to have when it releases the Cybertruck or the semi-truck. All these little things that's going to happen. And not only that, the robot. When Tesla releases the robot, this is something that's going to massively impact their sales. It's insane. So when it comes to the EV market, according to the latest research study, the demand of global electric vehicle market size and share was valued at roughly 185 billion in 2021 and is expected to reach 980 billion by 2028 at a compound annual growth rate of 24.5%. I don't know why I said percent. 24.5%. Now this is the renewable energy market. The global renewable energy market, valued at 881.7 billion in 2021, is projected to reach 1.9 trillion by 2030 at a compound annual growth rate of 8.4. So why I love Tesla? Tesla is a leading car brand on the planet. I think the one below them is Toyota, and I think Toyota has, $400 million of difference between their value and Tesla's value. Tesla is more diverse. It has more than just cars. People think it's just an electric vehicle company. It's not. They do clean energy and they do robots. The robots, once they have been fully developed, I see them as being an even bigger industry than their cars. And this is something that Elon Musk has gone on to say in multiple interviews throughout the years. It's virtually integrated, and in layman's term, virtually integrated means they create their own supply chain and parts in-house. So, for example, they might have purchased a lithium mining company, for example. So they don't have to get it from external suppliers. They create their own engines and power plants, all this type of stuff. That's what virtually integrated means. They do everything themselves in-house, and this is good because it increases margin and it gives them more flexibility to be able to do what they want to do with the supply chain. So they have the most developed production capacity out of any other vehicle manufacturing company in the world. The amount of vehicles that they can push out quarter after quarter after quarter is absolutely insane when you compare that to other manufacturers. They're operating at a 17.69 profit margin, and in this industry, where it's such an expensive industry, this is an insane margin to have. Tesla are selling cars like crazy. Elon Musk has actually been on record in saying that he's had to suspend people purchasing their vehicles because they can't keep up with the demand, and that is a great problem to have as a company. They have 17.7 billion in cash or cash equivalents on their balance sheet. So again, these guys have got a run rate that could last them a long time if we was continue going through this pandemic or whatever else may occur, supply chain issues. They have the ability to be able to last because they have a lot of money in cash reserves on their balance sheet. And that's the end of the video. So if you like it, please like, subscribe, and I'll see you in the next one. Take care of yourself.